Hello, everybody. This is Kirk Spano with Investing 2020s. Made a couple of updates to the YouTube and Zoom channels, so I just want to give you those updates. I didn't like having the two different webinar rooms, so I was able to combine them into one. And so now the webinars are set up. They have up to 500 guests, so invite all your friends if they want to try us out. You do still have to be registered on Zoom, but it should be pretty easy. So the meetings are Mondays and Thursdays, same as before. The Investing 2020s YouTube channel, pretty easy. Just click here, and everything is always going to be posted here after I record it, usually the next day, sometimes the night of, sometimes 2 days later. But generally, what I record today will be up tomorrow, and everything that I do will be free. However, some of the things I do will be unlisted. What does that mean? When I post them to YouTube, if there are specific trades that I don't want the public to have just yet, I will make those unlisted. And then you'll have to go to the chat room to see the link to those. Sometimes I will stick them in an article, but generally just go to the chat room so I can copy and paste that URL, stick it in there, and then you can go to the meeting. Shooter's Chart School is $2.99 a month. I mentioned that I was going to raise that from $1.99 to $2.99. So that's going to be $2.99 a month. And if you want to follow Shooter's thinking and technical analysis for $2.99 a month, I think it's a great add-on. That all goes 100% to him to encourage him to do the videos. So I think that even if you're a position trader and you're not looking for the swing trades, I think hearing the approach, and I think hearing his opinions of what's going on in the market will help you understand a lot of things, especially when I say traders being traders. And I know that people are trying to understand what that means, and it really is pretty simple, is that traders have a certain amount of power in the market, depending on the float of particular stocks and ETFs, right, the outstanding shares, as well as the leverage that they can have on their own money. And when Shooter sees that the market is pouring liquidity into a particular ETF or stock, or pulling liquidity out of or betting against, so basically negative liquidity, he can let you know that, hey, this is what's going on. And it doesn't always have anything to do with fundamentals. In fact, it usually does not. There's a narrative attached, and that's what the traders want you to focus on. They want to confuse you. They want to separate you from your money, right? These are all old concepts, but the internet makes them more effective. And so we have to be very careful not to fall into those traps. So listening to a trader explain the technical signals, and you knowing that sometimes the stock moving is just traders being traders, or a snapback from an overreaction, or an overreaction. So you have FOMO, you have short attacks, and you have reversals from the FOMO and the short attacks. Reversal from the short attacks is normally a short squeeze, and we are seeing that right now in Ametis, and we'll talk that through in a couple of minutes. So when you want to see the videos, just click the link here, bookmark it probably. You can join through this link, and then Investing 2020s is the password. To sign up for Shooter's Chart School and get his members only videos. Right now, actually, it's $1.99. I have to figure out how to raise that to $2.99. If you get in at $1.99 and I can leave you at $1.99, I will. If I can't, you'll all get bumped up a whole $1 per month. And that's part of our marketing strategy because, like I said, we are moving to India with a lot of our marketing, and $2.99 seems to be the right price point there. And it's a good hurdle to keep people from cherry picking our ideas by only using the YouTube channel. Although I will say, if you don't have the written analysis, you're probably going to get lost. So, all right, where are we? There's this thing called the debt ceiling. You may have heard of it, may not have. And it'll probably get resolved this week, and you'll probably get a small rally. However, there is the potential for something really bad to happen after the debt ceiling is raised. What could that be? Well, I posted this article in the chat last week, and let me copy this link for you and put it into today's Zoom chat. which I promised to do. When they raise the debt ceiling, because the government's been running on fumes for cash, they're immediately going to start selling U.S. Treasuries to raise cash. And the Fed will probably have to buy some of those. Just the act of selling the treasuries, though, and it's going to be pushing $1 trillion by early next year. So from next week maybe till early next year, they're going to raise $1 trillion by selling treasuries. Remember, there's still quantitative tightening going on. So between sucking dollars out of the economy and the financial system to buy treasuries, plus the quantitative tightening that's going on, that's an awful lot of liquidity that's going to come out of the stock and real estate markets. And this is in the face of the banks having to tighten up liquidity a bit. So I think there's a very good possibility that my thesis is going to play out to within just a few months. Remember, I said I thought that the stock market would bottom around Labor Day before we started another leg up in the stock market. So we've been hovering around 4,000, 4,200 on SPY all year. Right, we started at 4,000, got to 4,200, and we've been really in that range for over 4 months now. And that usually portends one of two things, either breakout or a breakdown. You don't stay range bound forever. Market either breaks out of it to the upside or breaks down to the downside. And it looks to me like we're going to get some flirting with breaking out, and then all the resistances are going to kick in. And if you take a look at the large cap stocks, especially the biggest 20 or 30, you can see that almost all of them have resistance right above. I mean, not very far, right? Not too high from where they are. So when you take a look at stocks like Microsoft and Apple and Amazon and Google and Meta, you come away looking at, this is a rally that could fail. This is something that's going to run into resistance. This is something else that's going to run into resistance. Here's one that bounced off a bottom, but probably is going to retest. And there's probably a couple like that. So with liquidity coming out of the financial system because of the government having to raise money and QT and banks tightening, you're probably going to see June, July, August, September being transitionary periods. And what do we know about transitionary periods? People hate them because they can't attach themselves to a fake narrative that makes them feel better. Right? It's hard for them to rationalize their existence in the financial universe if they can't make up a story about it. So what we have to remember is that as the traders pound their chests, and they stomp their feet and they clack their keyboards to no particular end other than to confuse you and get you to make the wrong trades, we have to not fall for it. So over the next 3, 4, 5 months, that would be my expectation, is that we find a way to break down below 4,000 on the S&P 500. 36 to 3,800 looks like a pretty good support level if things don't really go haywire. But I think that we should know by now that the ability of the markets to overreact and for the government to be slow and for corporations to need time to make adjustments could mean that 28 to 3,200 range is still in play. I am only about 10% cash that's uncovered. Now, I have more cash than 10%, right? I'm up around 26, 27, 28% in cash, but a lot of that is securing cash secured puts. Now, luckily for me, I've written a lot of cash secured puts that look like they're going to expire rather than be assigned to me. Why? Because I've been selling puts on the small caps, which I've been telling you since about November, we're probably going to start to outperform. And they had been flirting with it really since late last year. And it's really only those mega cap stocks, Apple, Microsoft, Nvidia, Amazon, Google, Berkshire has done very well. Right? There's not a lot of stocks doing well. There's just some really big stocks that have been holding the stock market up. And we've seen banks fall off. We've been seeing some of the REITs fall off, and there's probably more to go. The consumer staples have done all right because people would rather have a less bad stock than a bad stock, I guess. I never understand why people buy consumer staples. I don't. You might as well buy bonds if that's what you're going to do. You get a better coupon. So liquidity could tighten up. And what is the other impact of that? The dollar would go up in price. And what do we know about the dollar when it goes up in price. Risk assets, American risk assets, tend to go down in price, and international risk assets go down even more. So it's hard to be terribly bullish on very many risk assets, except the ones that have been beaten into oblivion. There are a handful of breakouts out there. Money has to rotate somewhere, and that's what Shooter looks for. Small caps of the last week, if you've noticed, are through the roof. My accounts are on average up 6% today, and the stock market is essentially flat. Why? Because the Russell 2000 is screaming, and we own some stocks that are just killing it today. It's not just the metas. We have 4 stocks up double digits today. People ask about why are the satellite stocks going up? Because the short attacks are running their course. There's just nowhere left to beat these stocks down into, and the shorts cover. First, the smart ones cover, then the dumb ones cover. Actually, I take that back. First, the smart ones cover, and then the followers who have some brains cover, and then the followers who, are kind of brain deficient, they finally cover at the end. Then everybody who's left, which is almost everybody, covers out of fear. So you have these stages of covering, just a few people, then a few more, then a few more, then, oh my God, I better cover because the stock just went up, 1,000%. It's just FOMO in reverse. That's probably what's going on with the metas right now, and I think we're pretty early in the process. You'll notice with that stock that volume today is a little bit lower than it was on Friday. So that, right? Everybody wants to say, what happened? What happened? What happened? What happened? There was one headline. It wasn't that big of a deal. Anybody who actually knows the company knew that it was coming. I told you guys about it for the 5th or 6th time a couple of weeks ago when I met with the Ametis management. And what we can see here is that on the daily chart, relative strength index is going through the roof. Can't go too much higher. If you take a look at the weekly chart, it's not overbought yet. So if that daily chart pulls back from up here to here, that means this will pull back too. And what does that look like? A, B, C. There's a whole nother rally coming in the Metis after this little move now is done. So while the stock has more than doubled off of its bottom, a little pause to refresh is probably going to occur. Give a lot of you who wanted to expand your position on our chance. Probably not too much lower than where we are today. Somewhere pushing 3 would be my guess. But then it probably resumes and shoots up to this area. This is kind of a next resistance point. And I'll show you how I know this. So here it came down, got to there, tried to get through, couldn't, came down, got to here, couldn't, broke down. So once it gets towards 5, it's breaking out again. And then that breakout will get it towards 7. What about after that? Well, let's take a look at the big chart. Very easy to see this making a run at its all-time high by January-ish, first quarter, I would think. So here we are with the stock at 384, and people are going to quibble about, did I miss it? And should I buy it now? And should I sell puts now? Because it just doubled. Folks, it's going to make another run at its all-time high pretty soon. The first catalyst, which is a small one, just tipped. There's been 3 or 4 analyst upgrades, right? Those don't all make the headlines, but the revenue estimates have all gone up. Zacks mentions that. Stock Rover has it. I mean, the news is everywhere except, it's not a headline event. Although sometimes in Yahoo, they put the Zacks stuff up. So everybody is starting to come around to my way of thinking with regard to Ametis. All the analysts are starting to agree with Kirk. This happens from time to time. They're catching up. And remember, the advantage that we have on the analysts is that we're not trying to keep our jobs. The analysts have an institutional imperative to keep their job. As long as they stay in the group and say about what the other guys are saying, nobody loses their job, because if something goes haywire, it happened to everybody. I stole that story directly from Warren Buffett. He told that story probably better than I just told it. Analysts move with the herd, just like traders move with the herd, just like most investors move with the herd. Your job is to not move with the herd. Be ahead of the herd or behind the herd, but not in the herd. Ahead of or behind. Doesn't matter which. You can win both ways. If you run with the herd, or you try to think, oh my God, look what they're all doing, I better do it too, and you get FOMO, or you go, I can't buy this because it's still going down, which actually isn't a horrible idea. but it just went down a lot and now I hate it. Why? It's like saying, I hate that tenderloin is on sale. I hate it. I love tenderloin, but I hate it when it's on sale, right? So when there's a short attack on something good, because they can make a narrative echo enough times, buy it. But wait until the heavy downward momentum is over with. Now, I got caught because I thought the heavy downward momentum on a Metis was done right around here. And then it started to go up and I felt pretty smart. And then went, dunk, oh, that's just a pullback. Off to the races. Uh-oh, damn, they got me. Oh, well, it happens sometimes. Now, what is a Metis worth? I have told you, every single long-term estimate that I can come up with, on the low side, a Metis is worth $3 billion. And I think it's probably worth $5 billion. And if some things go their way, that may or may not, we don't know, could be a $10 or $15 billion company. But making a run up to here is a short term. That's a 1 year deal. I think that a Metis will be between 17 and 22, within the next year. 3 to 5 billion is, probably 4, 5, 6 years out. It takes time for a business to execute their strategy. And another one of our jobs is to watch the management to see if they are executing their strategy. We have seen companies like Open Door and Kazoo and OnTrack. You can look at Carvana. And we can see they did not execute their strategies because they were stubborn, probably even a little oblivious to certain market facts that were out there. And they executed horribly. Usually a product of arrogance, greed, combination of the two. Hubris, is that exactly the same as arrogance, or is that a little bit different? It's not usually bad luck. I mean, we take a look at Carvana and Kazoo. They had a great business model, and they blew it by focusing on market share over profits and building a hard asset portfolio and a moat that they could have done. Now, because they didn't execute correctly, it's not a big deal for the guy with a corner lot and a little bit of money in his pocket to say, you know what? I'm going to build a really good website. I'm going to buy a warehouse, and I'm going to start accumulating cars and fixing them up and then flipping them online and get my 100 or 200 good reviews. I'm off to the races. And that's how I found the guy in Minnesota that I bought my car from. Never met the salesman. Talked to him on the phone a few times. Bought a car from Minnesota. They shipped it down here on a truck. Done. Sounds an awful like Carvana and Kazoo, doesn't it? And here's the thing. This is a dealer in a neighborhood, in a town, who I know. I don't know him personally, but I know where he is, and that makes me feel good. Not just some corporate entity. So how are Carvana and Kazoo going to compete with all the dealerships that just adopted their technology? And they have a place in the community. It's going to be tough. That's why I sold those stocks. I thought Kazoo, which is the one I bought, never owned Carvana. I thought that Kazoo in the UK could essentially become the biggest car dealership in the UK. And I know something about car dealership profits. They're pretty big. How do I know that? One of the places I went to go ask for money when I was involved with some charities and some nonprofits. They want to be known in their communities. They have money that they can spend on it, right? And I knew that we were in an era where there'd be less car dealerships. So I was thinking, hey, let's own the biggest one. And then Kazoo went and tried to expand into Europe, and they got, their proverbial asses handed to them. And that happens in all sorts of businesses where they don't execute. Open Door is another one. They so much believed in their model that they completely dismissed the way that real estate markets operate. There's a guy on Seeking Alpha who is a professional house flipper, I think for a mutual fund, I think for a hedge fund or a private equity firm. I'm not really sure who he's doing it for, but he's literally flipping dozens of properties a month. And he's mainly buying properties from Open Door, which is dumping them. It's mind-boggling that Open Door is locking in their losses. And that's why they're probably never going to make a lot of money, because they're stubborn. Until a guy like me, or this guy on Seeking Alpha, becomes the CEO and says, look, you morons. If that's no longer a politically correct word, I apologize. I wouldn't know why that one wasn't. But if it's not, because I've used some words that apparently aren't, hey, those words were used in the 80s and 90s pretty freely. So I'm gradually getting them out of my vocabulary as I am made aware by somebody who's offended that it's not a good word. But until somebody at Open Door says, look, you unsmart people. Stop trying to buck the real estate system. If prices are falling, stop buying up everything in sight and wait for them to stop falling. And if you do have a property that you're underwater on, and it's more than just a little, rent the thing out. You're better off taking your chances with a credit-worthy renter, right? That's one of the things that Open Door said is, we don't rent anything out because there's a risk in that. Whatever, man. You're locking in hundreds of thousands of dollars of losses on some of these houses. Go get somebody with a 720 credit score who's saving for a house, or they just moved and they need a place before they buy. Heck, they might even buy that house that you put them in. In any case, execution is a big deal. And when you look at a Metis, all you can really see, even with the hiccups in the energy sector, financing, the slow way that clean energy has moved, the execution has been there. And they have $1 billion paid for asset sitting over in India that now all of a sudden is dropping money to the bottom line. And by the way, that headline was about the California tax credits that have gone up in price about 25-30% in 2 weeks since California said, hey, we're going to tweak some things. So that's all that's being seen with the Metis is, hey, India dropped a few bucks to the bottom line. The tax credits for carbon in California have gone up a bit, and they've been promised that they'd go up more. Hasn't even happened yet. And the shorts ran out of juice. That's it. Shorts ran out of juice. The RNG got a certification too. So the big stuff at Metis hasn't even happened yet. So what I would point out is that this stock is a buy on pretty much every single dip. And I don't even know that at this price level, do you need a dip? So this was about 6% of my portfolio before it jumped off the bottom. Now it's, over 10%. And that's just the stock. I also own call options, and the Julys are about even right now after, being real low. And the Januaries, I think, are up 400 or 500%, something like that. So you take a look at this and you go, probably buy the dips here. They have a business that's a legacy business, and it'll be gone eventually. But the legacy business is ethanol based on corn. And that refinery is one they shut down for a few months to flip it over to mostly solar and away from natural gas. Because natural gas in California is expensive because there's still a pipeline out of service. So they said, well, why pay peak prices for natural gas if we're just going to lose money on the ethanol? Let's shift to solar for a few months, which I don't know if they turn that back on, the refinery back on just yet. I know it's like imminent. So not only are they not going to have to worry about the natural gas prices, but as somebody mentions in our chat room, price of corn for ethanol is dropping too. And I don't think that'll be long term, but we'll see. One of the things I keep reminding you about is as I drive around the country and I hear from people around the country, and I talk to farmers still who talk to all their farmer buddies, agriculture is going to be tight a long, long time, even when Ukraine comes completely back online. We're losing a few percent of the arable land every year. Fertilizer's not going to get cheaper. It might not get more expensive, but it's really not going to get cheaper. We got to be real careful with that. So, shooters charts this week. I had to do some editing on this because I didn't quite love the way that he did his bullet points. So I just updated them and sent them a note. So when you take a look at all of these, he's got some bullet points. I changed some of the last ones on how to deal with this. So if we take a look at Shopify, right? I talked about Shopify 2, 3, 4 months ago, and because it looked like it was coming off this bottom, right? We've talked about this stock before, and look what it's doing now a few months after I talked about it. Came off that primary wave setup down here. It hit its first target price. It's probably going to correct unless it breaks out, and it looks like it might be breaking out. But if it doesn't break out and drops below about $54, then this target 2 will come down here somewhere, probably right around the 50-day moving average. And then your third target will be up here somewhere, pushing the all-time high. My guess is that on the liquidity issues that we see over the summer, it probably does come back down here towards the 50-day moving average, and then it begins its next long journey up. And I think that happens to a lot of stocks. So I want to go down to Meta because he put it in here for me. So here's Meta. And I want to talk to you about this chart. As I told you, when it was way up here, it would go back down to 100. It did. like exactly hit 100. I think it was 101. And I did not pull the trigger on buying it. Oh, I guess it got down under 100 for a hot minute. I should have. Now it's way up here. People are like, should I buy it? Should I buy it? Should I buy it? Well, good Lord. Look, man, there's all kinds of stuff down in these troughs. Buy those instead. But if one were so inclined to look at this chart and think about it, it looks like it could break out to about, 270-ish, a little higher. Could even zoom all the way up to 376 if the market stays strong, right? If the market doesn't break down. But more likely it's going to pull back. And I don't think this is a big enough pullback. It could make a run at the spot where you get stopped out, which is low 200s. This is where some of those jitterbugs line up, right? If it breaks through this area, then it's probably going to make a run at the 50-day moving average. So here's a story where we have a stock that if the breakout holds because the market allows it to, could rally all the way up towards all-time highs, or if the market ends up putting too much pressure on it, and this isn't a stock that everybody rushes to, which has not seemed to be the case usually. This seems like a rally off a bottom to me of something that doesn't deserve to go much higher, whereas like a Metis deserves to go much higher. This one probably doesn't. Probably comes back down in here. Now, does it go all the way back down to its lows? I doubt it. Probably does one of these things, right? A, B, C, 1, 2, 3, whatever. Pick your wave. But yeah, simple retrace about halfway and then off to the races again towards its all-time highs. And I do think Facebook will eventually set all-time highs again. I just think it's much further into the future. And since investing is about relative performance, timeframes matter. Another thing to remember is that when you get tripped up in the market, and we all have, don't change your theory. Just figure out where you got tripped up and say, oh, whoops, don't do that again. Right? There's an old Lassie episode. Right? Do any of you remember Lassie? I'm not older than most of you, but Lassie was that collie that everybody fell in love with. And one day or one episode, the kid makes some mistake. I don't remember what it is anymore. Yeah, Timmy gets in trouble. Dad tells him about it. And he runs into the same situation again. And this time he changes his behavior, doesn't make a mistake. Things still didn't go great, but he didn't make the same mistake that would have made it worse. Tells his dad about it, and he goes, well, two kinds of people in the world, the ones who learn from their mistakes and the kinds that repeat them. You're the kind that learned from your mistake. I'm proud of you. And that's what we as investors have to constantly remind ourselves of. Don't make the same mistakes. It's very rare that I make the same mistake, over and over again. In fact, I don't think I make any of the mistakes over and over again. I mean, you're going to lose on certain stock bets, not necessarily because you made a mistake. I think more often than not, it's just management not executing in most cases. But every now and then, a chart tricks you, whatever. What you don't want to have happen is you talk yourself into doing something wrong because the trader narrative encouraged you to do something dumb. For those of you who have listened to me a while, I know that you've picked up on this. 80% of the stuff I tell you, I have just borrowed, massaged, and repeated from somebody way more successful than me. Every now and then I come up with a nugget. Usually just a more colorful way of saying something. Farmer's words. I want you to take a look at these charts in here, and I want you to try to interpret them. And then go to the chat room, post the chart that you think you've interpreted. Tell me what you think it means, right? Go ahead and use the bullet points as cheaters. Then ask me a question. So I think that that'll be a good exercise in reading some of these charts. Here's one. He did this before the weekend, before the news over the weekend. Well, actually, he did see the news. Micron. I've been talking about Micron more lately. To me, the most important stock in the semiconductor space, not because it truly is the most important, but it gives the best market signals. Micron, Samsung, SK Hynix. So Micron is extremely important because it gives big time market signals. It is the biggest provider of memory, DRAM, in the US, and they just got banned, it's a soft ban from being able to sell into China, which we have known for a while was probably coming, which explains a lot of the sell-off from 100-ish down to 50-ish. Hit the news again, and I'm hoping that we get a pullback. And I hope we get a pullback all the way into the 30s. If we can get a price level in here, right, from the 2018 low to the 2020 low, man, I'll buy a bunch of it. Why? because there is such huge long-term demand for what they're providing. And now that Samsung has tapped the brakes on production, and they're the 800-pound gorilla around the world, you can see the price of these semiconductors rise, and these guys go through the roof. This is a stock that we first bought when it was single digits, rode it into the 30s, felt really smart, sold it, went to 100, felt really dumb. And here it is, about halfway off its high, or it has been. And it looks like it might have one more wave down. If it gets to the 30s, pretty much should buy it and sell puts, because this company's products are so irreplaceable that there's virtually no risk to a long-term decline or permanent losses. So when you find one of those companies that are truly irreplaceable, Kinder Morgan, right? Intel, these guys, when they have a big correction, you can buy it, even if you don't buy it perfectly, knowing it's probably going to make another run at all-time highs in the next few years. And that's what I would expect with Micron. I think it's becoming more and more apparent to more and more people. Same thing with Intel. Yeah, Brandon remembers buying this in the 30s at the end of 2018. Yeah, and I should have. I told people they could, and then I didn't. Some people did, so Brandon's apparently smarter than me. It is what it is. But this company is so important to the whole semiconductor complex and the signals that it gives. Man, when Mike, and if you don't want to just buy one stock, when Micron is a buy, the index is a buy. So if this gets down to the 30s, it means everything else probably followed, and you can jump into, SOXX or something. Somebody had asked me privately, a newer subscriber, hey, it looks like you turned bullish. No, I did not turn bullish. I've been preparing you to become bullish later in the year, correct? Mainly on large caps, because people, when they talk about the market, they're talking about large caps. There's really a lot more to it than that. So the small caps, the international stocks, right? They have their own catalysts. Small caps come off of short attacks as their catalysts start to line up and tip over. International stocks mainly move with the dollar. And there's a huge conversation that we have to have about the new BRICS currency and about Bitcoin, how those are going to interact, what they're going to actually be used for, how much money they're actually going to move. I'll give you a hint. Bitcoin is much better positioned than a currency than China and Russia have a lot of say in, right? The countries that use the BRICS currency are going to take a very minimalistic approach and balance it with the actual amount of trade that they do with China, because nobody really trades with Russia. Brazil is something that is very on my radar right now. You've seen StoneCo rise 50 or 60% this year. I think that's going to continue. The banking sector in Brazil is getting very healthy. Remember, that's a country that's largely based on energy, resources, and technology, with rising consumerism and tourism. It's a pretty good mix. The only bad thing about Brazil at this point is they still kind of lead the world in kidnappings of Westerners. Yeah, they got to cut that out. They'd get a lot richer if they did. So the satellite stocks, I'm writing a separate piece on. The way the stocks of the week is going to come out this week is going to be in 4 or 5 strategies, rather than putting everything together, which is what I was working on, and it just became unbearable. I'm going to do a separate piece on energy, a separate piece on space, a separate piece on Warner Brothers and Paramount, because now that Paramount has cut their dividend, they're kind of the same. So that's how I'm going to do it, so that you can say, okay, here's the spot, right? Here's the industry that we're talking about. What's the strategy for buying long term? And we'll say almost everything that's in our small and mid cap space is a buy. The dips at this point, and the smaller the stock, probably just an outright buy. And it's been that way for months. Yeah, I mean, hey, Brandon, how many times have I told people to buy small cap stocks in the last 6 months? Brandon, how many times? More like 17 trillion times. All right. So look for those to come out. Somebody specifically asked about Palantir. I told you that at some point they would turn on the profit spigot and that they could do it almost anytime they wanted to. Well, now they're doing it. So are we going to get that Amazon rally when Amazon decided to be profitable, right? Just because a company's not profitable doesn't mean they can't be. A lot of times they're just spending on R&D and building out infrastructure and spending money on employees through stock grants. As those things slow down, then a lot of that top line revenue drops to the bottom line. And that is a huge mistake that people make when they invest. So they say, well, this company's not profitable. Take a look at the top line. In growth companies, you look at the top line first, not the bottom line. You look at the top line because that will tell you what the bottom line will become later. So think of the top line as a leading indicator of the bottom line. And if you see that the top line is growing 20, 30% a year, more sometimes, but 20 to 30% is pretty good, right? Growth. And you can identify where they can cut expenses, right? By just turning the spigot a little bit to the right? Lefty loosey, righty tighty. You go, oh, they're going to go much higher in price, and I can buy it at this price because it's not going to go up until all those people who don't understand how to actually invest say, oh, look, it's profitable now, I'll buy it. It's up 700%, but I'm going to buy it. You just need to be ahead of the market by 3-6 months. Sometimes you think you're ahead by 3 to 6 months and you're ahead by 2 years. That happens to me all the time. Hence why I have Shooter, because he can help me narrow that gap where I can be profitable by next year instead of 4 years out. Because investors don't really have that much patience. Say they do, usually don't. Some of them get really cranky when they get impatient. All right, let me edit this tonight and get it posted. Look for a bunch of shorter articles to come out this week. They'll all have the SOTW, Stocks of the Week, and then their title. And I'm going to break it down essentially by industry or subcategory so that when you want to look at the space stocks, they're all on one page. When you want to look at the energy stocks, they're all on one page. And I might even start doing the plug and play stocks like that instead of by small cap, mid cap. I might just have each industry from large cap to small cap, what we like. That might be a little bit easier for folks because I know that trying to catch up when you're new is hard and trying to stay organized for the long term is hard. So I just keep trying to tweak things to make it a little bit better incrementally from time to time. All right, I will get busy and see you on Thursday. And keep an eye on things this week to see what exactly this debt ceiling does. Let me close with this, actually. If these knuckleheads in Washington don't have a debt deal this week, and it goes into the weekend, and they don't have a debt deal by next Tuesday, if there's no debt deal, that market's going to open up down big time. So keep an eye on that. We might get a very special invitation to buy some stocks next week from asshole politicians, right? Brought to you by the oldest industry on earth. And it's not that other one, it's that one. All right, take care.